Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Let's go back to our euro currency discussion. So yesterday, guys, I have made the mistake that I said that so we'll get the non-farm payrolls on Friday, but actually, sure, it's postponed on next week. So, but this probably even could be treated as an advantage for the bears because they will have more time to price in the possible rate hike that's anticipated in March right now strongly. So I would like to show you the picture. So this is the 30-day Fed Fund future rate. So it shows the probable rate in corresponding month. So it's calculated as the 100 minus this one, and it shows the possible rate. So right now, after the Trump speech and some hints from the Fed Reserve representatives, you could see that Fed Fund dropped significantly, and by this drop, it increased the potential rate in March. So this is April contract. So to calculate the rate that is anticipated by the Fed Fund futures, you should minus this value, 99.16, 100 minus 1916, so it's approximately almost 1%. So as you can see, that was here, it's approximately 0.75 rate stands in corresponding to this area. Right now, it corresponds mostly to the whole percent. So that shows that market right now increases its anticipation of the rate hike in March. Actually, following this logic and monitoring on the probability. So based on this Fed Fund futures rate, right now investors has 66% probability that rate will be raised in the March. So this was a significant moment, and since the non-farm payroll is just a factor that could cancel this probability or at least reduce this probability. For example, as we said yesterday, if non-farm payrolls numbers, especially the wage inflation, will be less than expected, that could make impact on the chance on rate hike in March. But as we will get released only in the next week, so it's pretty much time for bears to press more on the market and anticipation on rate hike. As a result, as you can see, what we have first grabber that has been formed 2 days ago. Yesterday, as we said, we've got another bearish grabber. Both of these patterns suggest the taking out of these lows. So currently, guys, as you can see, euro has reduced the swings very significantly. So currently, mostly we could watch just on the intraday charts and see for some tactical issues that could happen today, maybe tomorrow, but large scales right now almost stands intact. So you can see market mostly stands within the 2 weeks in range of this first retracement. So we currently even do not use this large swing and fib levels out from this swing for trading. We mostly are coiling around this consolidation. So the one factor, the one pattern that could be formed still here, I'm not sure that's really will happen, but it's just this alternative view on the current situation. So first one is these grabbers and downward drop. Another one, take a look, market could form here the minor bar of line. This could be left wing, for example, if market will hold here and it will not take of these lows, this could show some deeper retracement. That will just bring more noise with the downward action, with the overall downward trend. And for example, market could form larger butterfly here. So it could be left wing. If market will show slightly deeper retracement, this could start to right wing. So another butterfly could be formed if this will happen. But currently, guys, I'm not seeing yet clear signs that this should happen. This is just trying maybe take a look at the different point of view on the current situation. Right now, technical picture here is definitely bearish, so you can see trend is bearish, market has formed bearish patterns. So that's why we mostly are watching for a downward plunge rather than forming of the butterfly here. But still, we should keep in mind this event because market right now on intraday chart stands in the point. It's very important for this pattern. So either market will turn up. If we will see something wrong here, we'll see that market doesn't want to continue move down. It could mean that something is changing, and this could become important. That's why when you keep in mind this possible pattern, you better understand what's really could happen. So on the intraday charts, on the 4-hour time frame chart, we have this downward action, some kind of a channel consolidation. Market behaves very well here. So you can see this upward retracements become slower. So first this was really fast. Second is gradual. That's why we said that probably we should treat it as a retracement mostly. Market right now returns back to the major 618 support. So it still stands around. So first bound touch, second touch. So if market will be able to hold here, as I said, and start move up, it could form this butterfly. It will bring nothing drastic to overall daily picture. So it will not mean that the downward tendency is broke. It just will push here to some high levels where downward action could be reestablished. As I said, on the daily charts, large pattern could be formed in the butterfly. But currently, guys, it's not the fact that this will be formed. So mostly it seems that the next destination point based on the 4-hour time frame chart we have around 104.50 area. So take a look, this is ABCD pattern, lower bar of this channel, and also take a look, this will be 127 extension of this swing. So maybe we could treat it as the butterfly pattern here as well. So that's most probable destination point. But today, guys, we should keep a close eye what will happen here. So on the hourly chart, let's increase the scale picture. As I said, we could just decide some tactical issues, because take a look what we really have. This is initial swing on the daily chart, right? So this minor retracement has happened. Next swing stands inside of it. That's why we can't use the fib levels from the large swing. We should decrease the scale, right? And we start to use fib levels of that swing, as we discussed yesterday. This was, by the way, 2 chances for taking the short, as we have discussed. First one was this retracement, second on this some kind of the bread and butter sell pattern has been formed on retesting of the weekly pivot point. But right now, as you can see, market forms the swings that stands right now inside of that one. It's minus some kind of nested doll here. Swings becomes smaller and smaller. That's why the trading scale, the time frame is decreasing. And currently we're just take a look what we are discussing. We're discussing just some minor patterns that are forming here. So as we're mostly watching for downward continuation here, this minor butterfly could be formed as well. The first level that could be reached stands at 105 even. It's 1618 will stands 104.75. It's very close to this area. So that's the next destination point. Also take a look, the market has dropped below the weekly pivot point, retested it. It's also, by the way, was the favorite for the EURUSD 50% retracement. Now it's dropping further. It turns back down below the weekly pivot point. So you can see we do not see right now any flaws in downward action. So downward price action behaves absolutely normal. No doubts that maybe some name problems we see here. So, but still, I just inform you with this theoretically possible butterfly pattern if market will see some barriers with the dropping lower. Just keep in mind this moment. But currently we treat this chances is very small for this event. Mostly, as I said, let's keep watching for 104.75 action. This will be probably the next short-term support area. This market will probably spend some time at the reaching of this target, and today, actually, maybe even tomorrow.